Time to have a look at markets now. Shares in Asia were mixed as the Bank of Japan held steady on monetary policy. The Nikkei in Japan fell almost a full percent, 0.9% down. And in mainland China, the Shanghai Composite dipped 0.7% on the day. The Hang Seng Index in Hong Kong rose marginally in its final hour of trading. Looking at what's happening on the European side, stocks struggled for direction as investors monitored economic data, corporate earnings, and the spread of the Delta COVID-19 variant. U.S. futures rose slightly as Wall Street neared the end of the first week of second quarter earnings reports. And to talk to us about the week that was and also what we can anticipate from an investor point of view, given the sentiment in our country right now, we are joined by Warwick Lucas from Galileo Capital. Warwick, thank you so much for your time. Let's start off by looking at the JSE. It's been a bit of an interesting ride so far when you look at the shares that were affected by the riots. What do you make of today's performance so far?
Well, Tash, I'd say it certainly was a very seesaw performance indeed over the last week. I think it's important that viewers remember the JSE really is an international stock exchange, and a big part of it are very big international companies like Naspers and Richmond and other Rand hedges and so on. So, in fact, on the whole, it was actually positive on the week, but largely because of a weak Rand. More closer to home, SAPTY stocks, you could call them, were certainly subdued to lower, which I'm sure is no surprise. And I think part of it was that the market sort of seemed to treat the whole violence as though it was a localized kind of problem rather than orchestrated violence. And I think they've only really woke up afterwards that wasn't the case. But of course, the situation was already improving by then. I think that the week as a whole, from a market point of view, was probably a bit less bruising than it could have been.
So let's talk retail sales. I mean, we had the figures that came out earlier this week where we basically expanded 15.8% year on year. Going forward, what do you think the impact will be on retail sales figures going forward, consumer confidence and business confidence as a result of the week we've just had?
Okay, so I think there's quite a few components to this. I mean, first of all, the companies that were hit the hardest will have been those that are obviously active in areas that experience the rioting. So not only, of course, KZN and parts of Gauteng, but obviously the proximity to the riot area. So examples of that, there were the likes of Cashbuild, for example, and Pepkor, that have many lower LSM customers. So, for example, I mean, Pep has reported something like 9% of its stores were shuttered due to the violence, and then depending on where else the violence occurred. So we had the likes of Mr. Price, something like 7% completely looted, Famous Brand, something like 3% looted. But I think the key thing here is not only the destruction of property. I mean, after all, the retailers might be insured against that, but the other issue, of course, is the loss of trading, which could be quite hard to make up. I mean, especially as I think in many areas there'll be a dent to confidence that'll take some time to clear away. I mean, you only have to think when you look in a normal year at the results of a business when they do a 52 to 53 week comparison. I mean, a week's trading makes a big difference in the life of a retailer. So they're going to feel that one pretty hard this year. Now, it will take time to recover, but I expect that the market's already starting to look past that.
On that note, then, as we wrap up the week, what will be the main focal point or points going into next week?
Okay, so I think the key issue internationally is going to be what are your earnings beats like in the US. Now, the prior base was quarter two of 2020 when you had your really heavy-duty COVID lockdowns. So we're looking for the likes of a 65% earnings bounce in the S&P 500, as much as 500 to 600 for industrial shares, and so those are big beats that are required, and we need to to see that come through for markets to sustain their growth internationally. Locally, of course, I think next week a period of digestion and introspection, and obviously we're hoping for a whole lot more stabilisation and a bit of understanding of what just happened in the last week.
Warwick, thank you so much for your time. Let's leave it there. That is Warwick Lucas from Galileo Capital. We're going to take a quick break, and when we come back, we'll have your money and SME on point with Diabo Seto. It's a goodbye from me.